Hey, this is Chris, and in this video I'm going to be talking about the 5 questions I think you need to be asking your investment advisor every year. And this is whether you have a stockbroker or a traditional financial advisor or an online advisor. These 5 questions are all relevant and ones that are relevant every year, and you should be refreshing and asking to make sure your portfolio is aligned with your goals. The first question would be, is my money working hard for me? And I think this is a pretty pertinent one this year because in 2021, interest rates in Australia are very close to zero, and it's very hard to earn a return without taking a little bit of risk. Yet I think a lot of people still have all of their money parked in safe term deposits and cash, earning nothing at all. So for most people, as long as your time horizon isn't just a few months or a year or two, investing some of your assets does make sense, and you should be speaking to your advisor about how you can make sure that you have some exposure to other assets that are going to work a bit harder for you than leaving all your money in the bank or term deposits. The second question, once you are investing, is how well diversified am I? It's a great question to be asking this year, and one you can look back on your results in 2020 to really find out how diversified you really were, because when the market fell 30 or 40% at the start of the year, you can have a look at how your portfolio performed. And if it performs similarly to the market, you're probably not well diversified enough into other asset classes like bonds and gold, which help to protect you when markets fall. The questions that you need to be asking is, am I diversified into other growth assets that will give me exposure to markets going well in other countries if Australia is not performing well? But also, am I exposed to assets that are more defensive if all growth assets perform poorly and I need a bit of an umbrella for my portfolio? The next question you need to be asking is, what fees am I paying? Now, this is one I think too many people fail to ask, and it has an enormous impact in the long run. A lot of people using traditional stockbrokers or advisors, once you add up all of the costs that you're paying, brokerage, crossing spreads, you're paying advisor fees, platform fees, fund fees. If you actually sum them all up, and it's sometimes difficult to do, but it's really worth doing, what you'll often see is you're paying 1 or 2 or 3 or sometimes 5% of your portfolio in costs every year. And that's just not sustainable, because with returns generally being quite low these days across all asset classes, you can't afford to be paying any more than 1% in fees or costs, because otherwise too much of your return is going to be eaten away in costs. And so it's a good time to speak to your advisor about what costs you're paying, and if you're paying too much, try and work out how you can be paying less. And then the final question I'd be asking is, if your advisor has put you into investments that are more active, and that could be direct shares, listed investment companies or LICs, managed funds, or other active funds, what you need to be asking is, what evidence do you have that these products have and will continue to outperform? There's a lot of data and research out there that shows that it's very difficult to pick these investments in advance, and very few of these active products actually perform better than just a diversified mix of ETFs. So it's a valid question to be asking your advisor, why are they going to continue to outperform, and what evidence do you have of this? You'd be surprised by how few advisors can actually answer this question. And the follow-up question is, what edge do you have, or does this fund manager have to beat the market? Because ultimately, if a fund manager or an advisor can't articulate what their unique edge is, and an edge is what's going to allow you to consistently beat the market over time, then what they're probably doing is just gambling your money, and they're taking fees, but ultimately giving you all the risk, and you shouldn't be making that decision. So really hone in on, what is this extra skill that this person has that's making lots of decisions that I'm trusting? And if they can't articulate what that is, I would be considering dropping a lot of active products from your portfolio, because every year the evidence is that 80 or 90% of them underperform the broad indices. And I think if you can ask your advisor those 5 questions, it's going to set you up for a great year of investing results.